want an exposure to a market or an asset.
Everything they need in one place.
The world's foremost authority on
Individuals, advisors and institutions.
It's always fun to celebrate a birthday or anniversary, and for this episode of Fund Managers Favorites, we're going to be celebrating the 3-year anniversary for Steve Message. 3 years ago, in December 2009, Steve Message started managing the Old Mutual Equity Income Fund. And if you had invested £10,000 at that point when he first started managing, you'd now have about £13,000. But alternatively, if you had invested £10,000 in the FTSE All-Share Index, you'd only have about £12,000. So some good outperformance there. And Steve is joining me now to talk about his fund performance and his top picks for Fund Managers Favorites. So, Steve, thanks very much for coming in.
Thank you.
Now, are you happy with your performance over the last 3 years?
Yes, as you said, I mean, we've outperformed the peer group and the benchmark over the 3 years, which I'm really pleased with, given how been quite challenging markets, quite risk-on, risk-off behaviour in markets, fairly volatile, but we've managed to come through that, and I'm pleased with the performance that I've delivered.
Now, you focus on income, but there's also a growth slant as well. Tell me just a little bit about that.
Well, we set the portfolio up with a total return approach in mind. And what do we mean by a total return approach? Well, I'm looking to maximise capital returns in the portfolio over the medium to long term, but also meet the income requirements that's necessary of the sector. So investments are either classified into two baskets. Firstly, for their income, a core income basket. We're focusing primarily on premium dividend yield stocks, but then complementing that with growth stocks as well, companies that may have a sub-market yield, but we're quite excited about the growth prospects. We put those two together, it allows us to deliver that total return approach.
Okay, now your top 3 picks today in the cardboard market, the TV market, and the booze market. We have DS Smith for cardboard, we have ITV for television, and Green King for pubs and booze. So a lot of different picks there. Let's go over your top pick, your first top pick, DS Smith.
Well, DS Smith is a stock which I bought at the start of the year. And what's attracted me to this investment is, I think, the transformational deal that the company's done through the acquisition of a European competitor. And what this will allow the company, I believe, will be a consolidator in the European paper and packaging market, which should drive some profit growth. But also further down the line, it brings them into new markets through the acquisition of the competitor, more in continental Europe. And finally, a skew greater towards packaging markets, which are less volatile than paper markets. So I think the combination of those, cost-cutting, cost efficiencies, entering new markets to win new revenue and new market share, particularly in Germany actually, where there's quite a big scope to increase share within the packaging markets, should deliver meaningful profit growth over the next few years and dividend growth for us as well. The valuation is attractive, 12 times prospective earnings with a dividend yield of around 3.5%, where I see good scope for those dividends to grow. So it's not without risk, but I think it's an interesting situation.
Okay, ITV is the next one. Why are you investing in television?
ITV, yes, it's quite an emotive stock, isn't it? It's in the news a fair bit. There's been a lot of structural concerns around IT over the last few years, and the business historically performed, in my view, quite poorly. But actually, if you look at the new management team, I think they've done quite a good job in terms of stabilising the business, improving the balance sheet, the strength of the balance sheet, and actually allowing it now to maybe invest more in its content to drive more advertising. I think actually the company has got a good scope to improve profits from here. You've seen it surprise over the last few sets of numbers. I think that will continue. I don't think the valuation is too high in a historical context. And you're really backing the management here to continue to improve cost efficiencies in the business, which allows it to invest in its content, which should drive profits going from here. So it's a situation that I'm quite excited about. Okay,
and the final top pick, we have Green King. What drew you to Green King?
Well, Green King is a domestic play, really. It's a pub operator, predominantly in the southeast. It's got around 2,500 pubs in the UK. And I think that the profits will continue to grow in the business as organic demand for their business continues to improve. We all know that there is a general trend to eating out and casual dining. I think that will continue. And actually, they're starting to grow their estate as well. So there's two legs to the growth, just for a more better consumer environment. And secondly, as they're increasing the number of pubs in their estate, I think over the next few years, you should probably see them grow the number of pubs in their business by around 150. So that's a good leg to their growth. And finally, we all know that some of the weaker players in the pub sector are all leaving the market as well. So it's actually growing in a shrinking market, which should all, for me, should drive good dividend and profit growth from here. And this falls within that core income basket that I spoke about earlier on. The starting yield's about 4.5%, and I think there's good scope for dividends to grow going forward, as the company has done historically.
Now, what would you say would be the key risks for each of these companies? Let's start with DS Smith.
Well, with DS Smith, I mean, it's a large acquisition, so you're backing the management to really deliver on this acquisition. So the key risk is integration risk with the business. It'd be hopeful that the management can really improve the profit going from here. So far, I think they have delivered, and I've every confidence at the moment that they'll continue to do that.
And what about ITV?
ITV, well, in the shorter term, it's still a cyclical business. It is really seeing the changes in advertising spend, and should there be a significant downturn in the UK economy, that will probably negatively affect advertising spend, which would probably dampen profits in the shorter term for ITV. So just maybe a weaker than expected advertising market.
And what would you say is the main risk for Green King?
Green King, well, it serves the consumers, so deteriorating consumer environment is the key risk for Green King, I would say. Deteriorating consumer confidence, but I don't think we're seeing that at the moment, so it's something that we're monitoring, but that would probably be the key risk for Green King.
Okay, thank you very much for coming in, and happy 3-year anniversary.
Thank you.
That was Steve Message from Old Mutual, and I'm Alana Petroff. Thanks very much for watching Morningstar.